I've tried hundreds of indicators in 7 years of trading, and only one I'll be using for the rest of my life. Now, there are a lot of indicators that give you something in specific. For example, it tells you where price is, it tells you the momentum, and it tells you the timing of the day or the session, a lot of things. But this one, it actually, in its core, is very specific, but it can be seen and it can give you a lot of things. So one of these is the direction. It can tell you the direction of the asset that you're viewing now. So if it's either bullish or bearish, and even if it's ranging, it's going to actually give you a sign that it is ranging now. Another one is price position, and we've talked a lot about price position. It's basically where are we now when it comes to the market structure, when it comes to, are we buying or are we selling? Are we in a good price to sell or to buy or to do nothing? That is, price position is very important, and this indicator is going to answer that question. Another one is where to buy and sell. So it's going to tell you exactly where to buy and where to sell and where not to do anything. And it will do this in a very simple way. And then it's going to tell you also when to trade the reversal. When is the reversal valid? And finally, it's going to tell you when to trade also the continuation. So if it's either a reversal, it's going to tell you, or a continuation, is going to give you signs too. So you can trade both reversals and continuation with this. If you notice, all of these are just using one indicator, and sometimes it's just a simple line. Now the question is, what is it? And it's a very simple thing, just a moving average. It's going to tell you all of these things. Now, probably when you see some other people talking about moving average, they explain it in a very simple way, and yes, it can be used in that simple way. But based on my years of experience, a moving average can actually tell you a lot of things, and it can be the only indicator that you can use in your trading plan, and that's what I'm doing. So it's something that I do use beside my trading plan in order to simplify the direction, simplify the entries, and then just give me an idea about the price position if I'm either trading continuation or reversals, all of these. Now, for people who are not aware of a moving average, what is it exactly? It is simply an indicator that calculates the average price of an asset. So you could be doing this with your dollar, you could be doing this with gold or some stocks over a specific number of past days. So it's a number of past days, and then it calculates the average price, and it shows you, okay, based on the last 20 days, for example, the average price for today is this. For the past, 30 days, 40 days, 50 days, a lot of different numbers for this. Now, there are two things that actually matters when it comes to a moving average. First of all is the type, and then the period. Now, the type, there are a lot of types, more than these three, but these are the three most popular ones: a simple moving average, an exponential moving average, and a weighted moving average. Now, the difference is very simple. For me, I would say, or my suggestion is using these first two, either a simple moving average or an exponential. And for me, I'll be using the exponential, and I'll be going over my exact settings, how to use it, and everything in the examples and explanation. Now, when it comes to the period, what does that mean? What is a period? 20, 50, 100, 200, these are some of the most popular ones that a lot of people use. Now, what does 20 means? 20 is that we're actually calculating the average price of the 20 last days. Now, when we say 50, we're doing this, but for the 50 last days, and then 100 and 200. Now, as we go to the right here, so from the 20 to the 200, as we go to the right, when the period increase, what's going to happen to the moving average is that it's going to give slower reactions. So if price was going up, and then suddenly going lower aggressively, the moving average is not going to give a quick reaction to this, because it's calculating the average of the previous 200 days. So it's not going to give a quick reaction. But here it's going to give very aggressive reactions. If we're doing a 10 or a 5 moving average, then you will see that it reacts aggressively to the price. And then there is a heavier weighting as well. So that means we're using more data here, and it's going to also increase the smoothness. That means it's going to be more smooth, something like this, instead of something like this. So in short, this is for short-term trading or short-term direction. This is for long-term direction. This is how we see it. And we're going to be covering all of this in the examples. All right, so now we're going to go over the settings and the setup of the indicator. Now here I have an empty chart. This has nothing here. So we're going to go to the indicators here, And if I'm deciding to go with moving average exponential, for example, which is the one that I recommend here, I'm going to type EMA and then go to moving average exponential. I'll be adding one here. And what I'll do is I'll go to the settings here and then I'll have 20, for example. Okay. And I'll change the color to something like gray. Okay. And then I'll press OK. Now, what we notice here is that there is a line, and this, because it's 20, that means here, I'm going to be looking for the previous 20 candles or 20 bars like this. And based on this, it's calculating the average price of these here. So that is the core of the moving average. Now, what I'm going to give you is my settings, the ones that I use. Now you can, play with this. You can go and try, for example, 200, and you'll see that now it's a bit different. It's more smooth and it's bigger now. So what I suggest doing is, my settings, the one that we're going to be explaining based on today is 20, and then I'll be adding another one. So I'll be adding another EMA, and it's going to be 50. So now if you notice, I have two moving average. Now I'll go here and I want you to notice from the first thing. What do you notice? We have two moving averages, right? The moment you see this, you'll notice that there are two lines and price goes above them, and sometimes it goes in between them. And when it goes in between them, what happens? It starts going up. And then when it retraces in between them, again, it goes aggressively up. And then again, in between goes up, in between goes up, in between, and then it goes up. And then if you notice here that the moving averages or the two lines are actually going above each other. So you notice one here, another one here. Now the faster one is going to be the lower in the period, or the length, which is the 20. So this is the 20 and this is the 50. I mean, I can actually change the color. So orange is going to be the 20, the quicker one. So we have 20 and 50. Now notice if I go back here, you will see the same thing happening, going up, coming in between, going up in between, and then you'll notice here, I've actually taken some trades here in Edge School with my members. You notice here, that is an opportunity to buy, going up, opportunity to buy, going up, opportunity to buy. So the first rule is that when the 20 is above the 50 and we have a cross, it was the opposite here. We have the 20 below the 50. So the 20 is deciding where we are now when it comes to the direction. So here we're bearish, but then we cross to the upside. So the 20 crosses up, and exactly at this moment here, what happened is the switch in the direction. So now we're going up, and you notice we go up, we're still respecting the 20, we go in between, and whatever key level that you're using. So I would just assume that you know this key level here, and you can go long here. All right, stop loss here based on the Edgemodo, for example. And the Edgemodo, if you're not, familiar with it, it's the strategy that I use now, and I trade with my members on Edge School, and it's one that actually give, an average of 5 to 1, 10 to 1, and sometimes even 20 to 1 trades. For example, another one is here, stop loss below, because now we are in a good price position, and notice what happened, a huge push to the upside. Now forget about this. What is the core is that we have a cross, and now the 20 is above the 50. That means we're going up. The 20 is below the 50. That means we sell, and we wait for the right opportunity. So that is the first thing, is the cross. Whenever we have a cross, it means a change in the direction. Now, when we have price not being able to maintain one side, and then even the structure is not valid, that means it's ranging. So sometimes it's going to range like this, and other times it's going to just go explosive to one side and then continue on that direction. So now the first rule is, and it's based on, explain the direction. And that is, it's all based on the 20 or the slower one. Now for this example, we have 20 and 50. But when the 20 is above the 50, that means we're bullish. And when the 20 is below the 50, that means we're bearish here. So that is the first rule. Now notice here, price, or the 20 is above the 50 and we are trending up. Now that is the first rule, and it's very simple. But then the second rule comes when price is in between the EMAs, it's time to enter. Now if you notice here, price is in between the moving average, that is what? a buying opportunity. But even if we go here and we notice we're bearish here, right? Prices in between the moving average, where here it was actually a selling opportunity. Now, number 3, when prices away from the moving average, it means reversal. And when I say reversal, that does not mean that I'll be entering blindly. No, I'll wait for structure, I'll wait for key levels, but based on price position, it's not time to look for continuation. It's better to look for reversal when it's valid. For example, you notice here price has been going above the moving average for a long time. I'll be looking for reversal when it's valid. Now price is going above, I'll be looking for reversal. In order to what? Retrace to in between the moving average. Then I'll be looking for the continuation. Away from it is reversal. In between it is continuation. Now, even when price is still not in between the moving average, but there is valid structure and it's going into a key level, you can still buy. So even here, it did not go in between the moving average. I can still buy if it's valid. For example, here. Now, we're in between the moving average. We sell. Now, even here, if I see that, okay, I do have this imbalance here, and we're respecting that one, even though price did not go in between the moving average, but the direction is still bearish, and I have a valid market structure and I have a valid key level, then I can still sell from here, for example, and then stop loss above the key level and looking for continuation. Now, again, here, prices in between the moving average, I can sell, and then prices in between the moving average. But now we can see that there is weakness here. So you always need to be also aware of the market structure that you're participating from. So if you notice here, this is a breaker structure, valid structure. I'm looking for the continuation from here. But for this range, do I have a valid structure? Not really. I have weakness here. And that means I'm not going to be very confident on the next retest of the moving average. So we keep it simple. You always look at your moving average. You want the pair to be trending, and you want to have valid structure. And whenever price goes in between the moving average, it needs to have market structure, a valid one, and it needs to have a key level. Whenever you have these two plus the moving average, that is a valid setup. I'll be buying here, I'll be buying here, I'll be buying here, buying here, and then it goes like this. Now, if you want to learn my trading strategy, the Edge model, and you want to trade with me to catch 5 to 1, 10 to 1, and even 20 to 1 trades, then make sure to check out edgeschool.net. That is my community. I have all the classes and all the details in the description. Thank you for watching the video. Make sure to like, leave a comment, and subscribe to the channel. And a special thanks to all the channel members, especially the accredited members. Thank you, and I'll see you in the next one.